Okay, we got a horse race here. Look at the S&P 500, just slightly below by 1 point. Can we make it to the upside? We've been there before today. NASDAQ, though, seems to have a little bit more trouble here, firmly planted below the flat line by about 5 points. Dow Jones Industrial's down 102, but I need to flip it over to the Russell 2000. The small and mid caps right now getting a percentage hit of about 0.5%. So we're lower by 7 points. Earlier, though, we had been down for the Russell by 25 points. So somewhat of a decent comeback here. So look, the bulls are turning tail in these final 3 minutes of trade. They've got a whiff of rising interest rates. Can we check the 10-year? It was at 3.179 at the top of the hour, moving slightly higher right now. We still have the vapor trail from last week's bear run. So our countdown closer comes in and says, don't worry about the higher rates. I've got picks to wipe away last week's sell-off and anything that we're seeing from the 10-year, which we're trying to get up on the screen right now. And as soon as we see it, we'll show it. Sure. Steve Chiavarone is portfolio manager at Federated. Okay, what do you do to kind of erase what happened last week? Yeah,
look, we think what we did was resume some opportunity within the market last week. Value cyclicals have been under pressure all year. These are your energy, your industrials, your materials, your financials, and there's still room to go there. But we also got some parts of the market that have been running that took a little bit of a breather. So tech, communication sector, some areas of discretionary, and we think that they're going to be well positioned for a rally and a recovery along with small caps into the back half of the year.
I will ask the same question I ask a lot of the people who sit in that chair. We are in what is now, used to be the second longest expansion in the markets on record. It's now the longest.
Sure.
How much longer?
There's not an artificial clock on these things. The way we think about it is you put a framework in place. Are earnings growing? Is inflation relatively benign? And is the Fed moving at a measured pace? When that ends, it's time to flip the script. But none of those three things have ended yet. And so it's time to stick with it, look for opportunities when they arise, and expect markets to move higher.
You talk about technology. Yep. There are about 150 subsectors in technology. Yep. Which ones do you like?
Well, look, the FANGs themselves have underperformed massively since the middle of the year, and there's opportunities that you could pick off in that area. We think semis, we may have seen the trough there as well. And then the new communications sector, which, again, has some of those FANGs. We think there's some opportunities there. You had a great segment on some of the media names in the future there that looks still quite bright.
Right. Reed Hastings of Netflix had said that the best positioned media companies are the ones who are in news and sports.
Content's everything.
That would be Fox A, but, you know, I would say Comcast is in there, too.
It's all about great content, Liz.
Exactly. Thank you. And we've got it right here. In the end, let's broaden this discussion really quickly. Today, we've had some real trouble staying above the flat line, and yet we were there earlier. What do you think's in the psychology?
I think the market has a solid gold consensus that unemployment is so low that wages have to explode. Inflation is coming right around the corner, and we're going to die tomorrow. We think that that's not right. We think this is going to take a whole lot longer.